Before money existed, humans relied on barter to trade goods. People exchanged grain for livestock or tools for food. While this system worked, it was slow and unreliable because both parties had to want exactly what the other offered. As civilizations grew, the need for safer ways to store and manage wealth became urgent. People needed places where their valuables could be kept secure and where loans could be arranged without carrying heavy goods over long distances. This need gave birth to the earliest forms of banking. The first banking activities appeared in ancient Mesopotamia, located between the Tigris and Euphrates rivers, in what is now modern-day Iraq. This began around 3000 BCE, long before coins existed, when wealth was measured in grain, silver, and livestock. Temples and palaces acted as the first banks. People trusted temples because they were sacred spaces, and palaces because they were protected by kings. One of the earliest banking centers was in Sumer, a civilization in southern Mesopotamia. Major cities included Uruk and Ur. The Temple of Inanna in Uruk functioned like a bank. Farmers and merchants deposited grain and silver for safekeeping, and temple officials kept careful records on clay tablets using cuneiform writing. These tablets recorded deposits, withdrawals, and loans, forming the earliest known financial records. Loans were already part of the system. Borrowers paid back more than they received, creating the concept of interest. Interest was usually paid in grain or silver. This system allowed temples to finance trade and support the local economy. Banking later developed in Babylon, near modern-day Hilla, Iraq. Around 1754 BCE, King Hammurabi created the famous Code of Hammurabi, which included banking laws. The code regulated loans, interest rates, and punishments for fraud, showing that banking was already an organized and legal system. Private individuals also began offering banking services as merchant bankers. They loaned silver to traders and financed long-distance trade, reducing the risk of carrying large amounts of goods. Banking began to move from religious institutions to private business. In ancient Egypt, around 2000 BCE, banking also developed using grain as a form of currency. State-owned granaries acted as banks, storing deposits for farmers. Receipts issued for deposits could be transferred, acting like early paper money. By 600 BCE, banking had spread to ancient Greece. Greek bankers, called trapezitai, operated in cities like Athens from tables called trapeza, which is where the word bank originated. They accepted deposits, exchanged currencies, and issued loans with interest, marking the beginning of modern-style private banking. From temples to private merchants, banking evolved to meet the needs of trade and society. These early systems laid the foundation for the complex banking networks we know today. After banking developed in Mesopotamia, Egypt, and Greece, the system spread to ancient Rome, where banking became more advanced and widely used by ordinary citizens. Roman bankers were called argentarii, and they operated in public places such as marketplaces and forums, making banking accessible to traders, soldiers, and everyday people. Roman banks accepted deposits, exchanged currencies from different regions, transferred money between cities, and issued loans for business and trade. Rome introduced written contracts, account balances, and legal protections for both bankers and customers, which helped banking gain public trust. As the Roman Empire expanded across Europe, banking knowledge spread with it, connecting distant regions through finance. When the Roman Empire fell around 476 CE, formal banking declined in Europe and trade slowed significantly. During the early Middle Ages, the Christian Church discouraged charging interest, which reduced banking activities across much of Europe. However, banking survived through merchants and money changers who continued supporting trade quietly. Banking was revived strongly in medieval Italy between the 12th and 14th centuries, especially in cities like Florence, Venice, and Genoa. Italian merchant families became powerful bankers, handling money for kings, popes, and international traders. One of the most famous early banking families was the Medici family of Florence, founded by Giovanni di Bicci de' Medici in 1397. The Medici Bank became one of the largest and most influential banks in Europe, introducing modern accounting methods such as double-entry bookkeeping. Around this time, the word bank came from the Italian word banco, meaning a bench or table where money changers worked. Banking continued to evolve with the rise of international trade, and banks began issuing letters of credit, allowing merchants to travel without carrying large amounts of cash. In 1609, one of the first modern public banks, the Bank of Amsterdam, was established in Amsterdam, Netherlands to stabilize currency and support trade. The Bank of Amsterdam gained strong public trust by backing deposits with real assets, setting standards for future banks. In 1694, the Bank of England was founded in London, England, to help finance the government and manage national debt. The Bank of England introduced ideas that shaped modern central banking, including issuing banknotes and controlling money supply. As industrialization began in the 18th and 19th centuries, banks expanded rapidly to finance factories, railways, and global trade. Commercial banks, savings banks, and investment banks emerged, serving different financial needs of society. In the 20th century, governments introduced banking regulations to protect depositors and prevent financial collapse. Central banks were created in many countries to control inflation, manage national currencies, and stabilize economies. With the invention of computers, banking entered the digital age, introducing electronic transfers, credit cards, and online banking. Today, banking operates globally, connecting individuals, businesses, and governments through digital financial systems. From ancient temples storing grain to digital banks moving money in seconds, banking has evolved alongside human civilization. Banking changed how people save, trade, invest, and build wealth across generations. This marks the complete journey of banking, from its ancient origins to the modern financial world. And that moment changed banking history forever.